On 8 July 2021, I took a $50,000 investment loan at an annual interest rate of 1.2% to buy 350 Apple stock at a stock price of $142. In this video, I share whether it was worth it and the lessons I've learned along the way. Click subscribe to stay updated to more videos on investing. It's a rainy day today, reflecting our investment sentiment this year. Let's start by calculating my investment returns. For a 1-year investment loan, my interest payment is $50,000 multiplied by 1.2% interest rate, which is $600. Apple also pays a quarterly dividend. I've held the stock for 12 months, which means I get 4 dividend payments. For the first 3 quarters, it was 22 cents per stock, and in the last quarter, 23 cents per stock. That gives a net dividend payment of 89 cents per stock over the past 12 months. With 350 Apple stock, that is a total dividend of $311.50. My net cost would be interest payments minus dividend earnings, which is $600 minus $311.50, giving me a net cost of $288.50. To find my break-even stock price, I will take $50,000 plus my net cost of $288.50 divided by 350 Apple stock, giving me a break-even Apple stock price of $143.70. At a closing price of $147, there's a net investment return of 2.3% or $1,150. That is below Singapore's inflation rate of 5% and just above Singapore's fixed deposit rate of 2%. For context, the S&P 500 was down 11% in the past 12 months. Here are a few lessons I've learned. Investing in a safe stock like Apple is no guarantee for positive financial returns. There were weeks where Apple traded below my break-even point of $143.70. And if I sold Apple stock then, I would have made a loss. There were also days where Apple traded above $180, and selling then would have resulted in a 26% gain. Nobody can consistently predict short-term prices. I believe that the longer our investment horizon, the more likely we are to see positive returns. This is especially true with companies with strong fundamentals, like Apple, with a sticky ecosystem, strong profit margins, and healthy cash flow. Over a 5 to 10 year period, I'm confident that my investment returns would beat inflation and the S&P 500. Lastly, there is an opportunity cost in how we use our money. There were other investments that generated a better return than Apple in the past 12 months. For instance, Tesla generated a 9.8% return. For some Singaporeans, they made money selling the cars because of the rapid rise in the COE. Hindsight is 20/20, and every investment carries different risks. In volatile times like this, it's best for most of us to reduce our use of margin. Nobody can predict short-term prices, and many feel prices will stay low in the next 12 to 18 months. And many people may not have the financial cushion to manage the risk of being margin called. For me, I intend to renew this 12-month investment loan and hold Apple stock for the long term. I'm reducing margin as a percentage of my entire portfolio by only buying new stock with cash in the future. I've also taken a $50,000 investment loan to buy Tesla stock back in September 2021, and I'll share a 1-year update soon. If you found this video useful, please click the like button. Hit subscribe to stay updated to my investment journey. Invest safe and take care.